What if I told you that Cardano, one of the market's top altcoins, could hit $3 in just a matter of weeks? Sounds too good to be true, right? Well, some analysts are doubling down on this bold prediction, and we're going to dive into exactly how and why. When a coin slips 21% in a week, it's hard not to wonder, has something gone seriously wrong, or is this a setup for a massive comeback? Let's start with the facts. Cardano 𝗓𝗓, a project known for its robust community and innovative approach to blockchain development, has been under pressure lately. Over the past week, 𝗓𝗓's price plummeted from around the $1.30 to near 91 cents before crawling back slightly. As of the latest data, 𝗓𝗓 is hovering around the $1 level, slightly roughly down 12.36% or so in the past 24 hours, and over 21% in the past week. Now, if you've been following the cryptocurrency market updates, you know Cardano isn't the only asset struggling. The entire crypto market has been feeling the heat from a macroeconomic headwind as such, right? Regulatory uncertainties are still there and shifting investor sentiment. And of course, we have to also consider that a lot of the new investors, they're in it for quick gains and they've been kind of used to maybe meme coin, pump.fun and shit like that. Where actual products with true utility and kind of take a little bit longer to kind of develop in, they probably just haven't seen enough gains and they're taking some profits off the table after significant surge. Still, 𝗓𝗓's recent drop feels pretty sharp, right? Considering everything, and especially given the network's substantial following and it's known for slow and steady approach to development, right? Now, investors are understandably concerned if a project like Cardano, often touted for its strong fundamentals, can take such a hit. What does that say about the kind of broader crypto market sentiment? Are we entering a deeper bear phase, or is this a temporary blip? Right, well, before jumping to conclusions, it's crucial to put this drop into perspective. Corrections happen, especially in the volatile world of crypto. The question isn't whether Cardano can drop like this, it's whether it can bounce back. And that's where the analysis or analysts really come in. Some believe that we're on the cusp of a dramatic rebound, one that could not only recover the recent losses, but catapult 𝗓𝗓 into completely new territory. Next, we're going to be taking a look at these bold predictions. Are they just hype, or is there a method to this madness? Well, imagine waking up in a month to find that Cardano hasn't tripled in value, or this has tripled in value. It sounds completely crazy, right? On top, one top analyst, is saying that it's not just possible, it's realistic. Enter Dan, a well-known Cardano bull who has kind of caught everyone's attention with his audacious price targets. Now, Dan states that 𝗓𝗓 could realistically hit $3 as soon as January 10th, 2025. Yes, you heard that right. Just about 4 weeks away. Now, a triple in price from current levels is such a short time frame. It's kind of no small feat, especially considering the current sentiment, right? So what's really behind this confidence, right? Dan points to a historical precedent, drawing parallels to the massive pump Cardano witnessed from Q4 2020 into Q1 2021. Back then, 𝗓𝗓 skyrocketed, riding a wave of a booming bull market and growing adoption. If history rhymes, the argument goes, we could be on the verge of a very similar explosive move. But let's be clear. Historical comparisons are not guarantees. Just because something happened before does not mean that it's going to happen again. Still, market psychology often plays out in repeating patterns. When traders recall a past bull run, they might position themselves ahead of what they perceive to be a very similar move. It's effectively kind of creating a self-fulfilling prophecy. Now, Dan also notes that reaching $3 might be more realistic by January 24th, suggesting some wedgy kind of like wiggle room within his kind of prediction. He acknowledges that the he tends to be slightly early in his predictions. Even so, a month-long time frame is incredibly bold for that to kind of happen. Now, we'd likely need to see a significant shift in market sentiment, in improved macro conditions, and a surge in network activity and adoption. Right, all very possible though. Now, let's take a look at this historical context that Dan is backing on. Right, what exactly happened in late 2020 and early 2021 that might be that might kind of be relevant today in today's pricing? Well, let's say history doesn't repeat itself, but it often rhymes, right? Cardano's last rise is kind of etched in investors' minds, but can it kind of, lightning kind of strike twice, I guess, is a good way of articulating it. Back in the late stages of 2020, the crypto market was in a very different place, right? Bitcoin was starting to gain mainstream attention, and Ethereum was on the cusp of the DeFi explosion. Altcoins, particularly ones with strong communities like Cardano, began to surge as investor confidence soared. From Q4 2020 into Q1 2021, ADA experienced a substantial rally, moving from just a few cents to well over $1, a period that was marked by growing anticipation for Cardano network upgrades, including the introduction of smart contracts on its platform. The combination of bullish market sentiment, significant technological milestones, and a wave of new investors entering the space kind of helped propel ADA's price. Now, if we fast forward to today, the environment has changed, right? We're not in a kind of roaring bull market just yet. I do think that is to come in the next few weeks though, so we'll keep an eye. Regulatory uncertainties, right? A more kind of cautious retail environment, maybe. A global and of course global macroeconomic factors have kind of dampened, the enthusiasm a little bit. But the argument is that if Cardano could rally under different conditions that we saw before, it might also do it again as the narratives improve, right? We are entering into a kind of time where we are going to be getting more crypto-friendly regulatory policies and frameworks over in the US, right? We are in this kind of transition period. We saw this back in 2020. We saw this back in 2016. And we basically are in this transition period where we're exiting one kind of authority figure, or I was going to say a dictator, but however you want to kind of articulate Biden's entirely up to you. We're exiting one moron to bring another one in, right? It doesn't really matter. You can comment down below how you want to think about that. But essentially, this transition period is critical, right? I've done a lot of analysis on this when it comes to Bitcoin and how Bitcoin reacts to this kind of US election and how that has always been positively perceived by the crypto markets, okay? Regardless of who won the election, every single election in Bitcoin history has had a positive effect on crypto, okay? And then you have a cooling off period, which we're currently experiencing, before you get to the inauguration of the president, okay? And in this particular case, it's the inauguration of Donald Trump, right? So when he takes office in 2025, that is the trigger point where things go absolutely parabolic. So this kind of aligns with the idea of late, January 2025, or in my opinion, late Q1 of 2025. Okay, so I don't think that Dan is wrong with his prediction, but he is significantly too early in my opinion. Okay, in just 4 weeks, that's a big, bold move. And as I said, right, the environment has shifted and it has changed, right? Cardano was riding a wave of optimism back in 2020, 2021. And of course, there was a lot going on. We had, stimulus being printed. We had a significant amount more capital flowing in. Now that doesn't change terribly too much because I do think we're going to see things also kind of coming to fruition. We have interest rates on the decline. This is going to help with the investors' mindsets being risk on rather than risk off. We have Donald Trump looking at crypto policies in the US that are going to be favorable. We have a lot of positive things going on, but they are going to take some time to play on out. So I think the conditions are actually going to be very bullish for Cardano. And as for the network upgrades, well, we are already seeing some really good things going on when it comes to the on-chain decentralized governance. So for Cardano to kind of replicate the kind of move, we need a catalyst, right? This might be more than, clarity on new features, scaling solutions, collaborations or partnerships that kind of spur investor excitement. It could also come from a broader crypto market recovery if Bitcoin breaks through major resistance levels and kind of leads the charge. Altcoins like ADA can follow suit. And of course, we've got all of those fantastic things I was just talking about to layer on top, right, from outside of the crypto world. And of course, right, the crypto landscape is very different today than it was back in 2021, right? Competition has intensified. The novelty factor has kind of worn off. Still, the sheer potential of Cardano's ecosystem expansions, along with pent-up investor interest, could spur another run. Let's not even mention the possibilities of ETFs. Now, let's kind of examine alternative timelines, right? Dan offers, or at least the ones that Dan offers, right, the 4-week kind of period. And let's kind of look at the reasoning behind adjusting the target date a little bit, right? Is January 10th too ambitious? And why might January 24th be a little bit more palatable in kind of trying to make this $3 prediction? Well, if predicting crypto prices is tough, predicting when they're going to hit these prices is insanely difficult. So what's behind the new timelines, right? Well, the January 10th, 2025 target might grab headlines. Dan tempers expectations a little bit by offering January 24th as a more realistic time frame. Why give yourself an extra 2 weeks? Simply put, market timing is notoriously challenging. Even the most kind of experienced analysts and traders can be off by days, weeks, or even months. By suggesting January 24th, Dan acknowledges the unpredictability of market dynamics. Prices are influenced by countless variables: investor sentiment, institutional interest, liquidity conditions, and even major global events. A single piece of regulatory news or sudden shift in macroeconomic indicators, or a kind of surprising technological kind of development could accelerate or delay the anticipated rally, right? This flexibility also hints at the underlying uncertainty in the markets. Bulls remain optimistic, but there's an understanding that achieving a sustained breakout requires more than just hope. It requires confirmation in the kind of form of higher highs and rising trading volumes, and ultimately improved fundamentals. But what if the bulls are wrong, or at least too early? Let's say turn to more cautious perspectives. Some analysts argue that ADA's troubles might not yet be over. Before we can celebrate a potential move to $3, we might have to contend with some more downside risk. For every bullish prediction, there's a kind of sobering counterpoint, right? Could ADA fall further before it sees kind of a meaningful pump to the upside? Well, Ali Martinez brings us back down to earth with a more realistic or cautious take. He identifies a critical support level near the $1.20, where around 93,000 ADA addresses collectively hold a staggering 2.54 billion ADA. This is a critical zone because it represents a large base of holders who could either shore up the price, or if the dips below this level, or even panic sell if the price falls lower. Now, this could also drive prices even lower. And if ADA can't hold above $1.20 for a sustained period of time, Martinez warns that it could see a deeper decline below $1. And this is kind of a sobering thought for those kind of banking on more of a quick recovery. Additionally, Martinez's analysis shows that 64.68% of current ADA holders are sitting on unrealized losses, as are many other altcoins as well. So with so many investors underwater, any price rally could be met by selling pressure, essentially, as they attempt to break even or minimize their losses. This potential for sell-off during kind of rebounds is common in bear markets. When the token rallies after a prolonged decline, there's often a kind of wave of profit taking, or rather loss cutting, as trapped investors kind of exit their positions. This selling pressure can cap the upside and make it harder for the asset to sustain momentum. On the bright side, though, Martinez also notes a demand zone between 98 cents and $1.02, where over 41,720 addresses hold over 1 billion ADA. This could act as a safety net if the price plunges. Now, Let's see, right? Are we relying on a final line of defense instead of kind of exactly kind of, I should say, relying on a single line of defense isn't exactly kind of reassuring now, is it, right? But it does highlight the kind of precautious position that ADA does find itself in, right? Or precarious position that ADA finds itself in. But let's consider what on-chain metrics have to say, right? The network fundamentals, do they support a bullish turnaround, or do they suggest more of a kind of brace for impact and more pain ahead? Numbers don't lie, after all, right? And on-chain data reveals whether the hype is real or we're just witnessing, just kind of like another more kind of time in the darker days yet to kind of come and all that kind of stuff. So on-chain metrics often serve as a reliable barometer of network health and investor engagement. For Cardano, the latest data from Into the Block basically presents a mixed picture that kind of leans a little bit on the bearish side. New address creation has dropped by a substantial 44.9% over the past week. Active addresses are also down by 38.6%, signaling less traction, particularly transaction activity, and possibly a warning to investors interest, right? At least in the short term. This decline in network activity could mean fewer participants are joining the Cardano ecosystem, which might dampen the price prospects. When further new investors enter the scene, the momentum required to sustain rallies diminishes. Additionally, a 46.15% drop in zero balance addresses suggests that some wallets have either consolidated or abandoned the network, further indicating a cooling off period. These metrics matter because they reflect the network's real-time usage. Price action can sometimes be influenced by speculative trading alone, but long-term growth typically comes in the form of actual utility, more users, more transactions, and more demand for the underlying token. To reignite enthusiasm, Cardano might need a spark, an upgrade, a high-profile partnership, a DeFi boom on its chain, or renewed interest from institutional players. Until then, these on-chain signals will keep traders very cautious. As we kind of move forward, it's essential to understand how Cardano's situation fits into the broader crypto landscape. How does ADA fare relative to major players like Bitcoin and Ethereum? And what lessons can we kind of learn from the wider market sentiment? ADA isn't alone in its struggles, right? When giants like Bitcoin and Ethereum stumble, their little siblings tend to follow suit. Cardano's price movements don't happen in isolation. The broader crypto market and even the global financial landscape plays a huge role. Bitcoin trends, for instance, often set the tone for the altcoins. If Bitcoin can break out of its current trading range and mount a rally, it could usually boost the entire crypto market's morale, right? Encouraging investors to rotate profits into promising altcoins like ADA. Ethereum's developments also matter. As the kind of leading smart contract platform, Ethereum's success often shines a spotlight on competitors, right? If Ethereum enjoys a surge thanks to a new upgrade or a DeFi boom, investors might actually start looking for alternative layer 1 solutions, including Cardano, to kind of find undervalued opportunities. However, macroeconomic backdrop remains uncertain. Inflation concerns, interest rate policies, the regulatory pressures have weighed heavily on risk assets, including cryptocurrencies. If these kind of macro headwinds persist, even the best fundamentals might not be enough to propel ADA to $3 anytime soon. But of course, like I said earlier, things are changing. We do, of course, have this little bit of a pullback that is very much what I've been expecting and what I've been articulating and talking about, because it is typically what we see just before the inauguration of the US president, which happens on January 20th. So on the flip side, of course, as these macro environments improve, if regulatory policies get clearer and frameworks start to actually be more positive towards crypto innovation, and of course we start seeing inflation easing and we see interest rates dropping, the traditional investors embrace crypto as a hedge, then the entire market could benefit. In such scenarios, ADA's strong community developmental roadmap could help it outperform many of its peers. It's also worth noting that the sentiment can shift quickly in crypto. A positive development developments such as a major brand announcement, a Cardano partnership, a successful testnet event could spark renewed interest. Conversely, negative regulatory news or a major hack could send prices tumbling further. Now that we kind of have considered both bullish and bearish signals, the historical context, on-chain signals, and market-wide trends, where does that leave us as investors or crypto enthusiasts? Well, should you be buying, holding, or selling? Understanding the bigger picture can help guide your strategy, no matter which side of the debate that you land on, right? The clash of predictions from Dan's $3 target to Martinez's caution highlights the complexity of the crypto market. On one hand, we have historical precedents and enthusiastic bulls ready to kind of bet on a quick turnaround. On the other hand, we have sobering on-chain data and critical support levels that must hold. For the average investor, it's essential to think long-term. Cardano's ultimate value proposition lies in its technology, ecosystem growth, and community. Price predictions may come and go, but what truly matters is whether Cardano can continue to innovate, attract developers, and foster an engaged user base. No one can predict the future with 100% certainty, and short-term price calls are often just educated guesses. For some, this uncertainty is exhilarating. For others, it's a reminder to exercise caution, diversify portfolios, and only invest what you can afford to lose. Do not invest more than you can afford to lose. So what's the key takeaway? Keep an eye on Cardano's development roadmap, monitor how the network capabilities evolve, and pay attention to the health of the broader crypto market. If Cardano solidifies its position as a leading blockchain platform with real-world use cases, then today's prices might just look like an absolute bargain in hindsight, whether or not it hits $3 in 4 weeks. Before you kind of log off and start kind of placing your bets, let's recap what we've learned and map out kind of the road ahead. In the cryptocurrency market, we've kind of, at least this update, we've explored the latest Cardano news, right? Starting with a steep price drop that kind of shook investor confidence, followed by bold predictions for a quick and dramatic turnaround from Dan. Analyst Dan envisions $3 in ADA in just a matter of 4 weeks, drawing inspiration from historical data from 2020 and 2021. While optimism runs high on one side, caution is abound on the other, right? Analyst Ali Martinez warns of critical support levels, looming selling pressure, backed by on-chain data and declining network activity, right? We have hopes and dreams on one side and raw facts and data on the other. Are you considering these viewpoints? Remember, right, the crypto market is ever-changing. Price targets can shift. Timelines need to be adjusted. On-chain metrics, macroeconomic trends, and the performance of heavyweights like Bitcoin and Ethereum will all play a part in shaping Cardano's journey. So, what's next for ADA and the broader crypto market? It could be a triumphant rally, or a period of the consolidation, or another leg down. The key is to stay informed, do your own research, and approach every prediction, bullish or bearish, with a very critical eye. If you found this breakdown helpful, please hit that like button for me. It really does help the channel out massively. If you're new, subscribe for the latest kind of Cardano news and technical analysis. Share your thoughts in the comments down below. Do you believe that Cardano can hit $3 by the end of January? Are you bullish, bearish, or somewhere in between? Let me know in the comments below. And guys, if you haven't done so already, check that video out right there. It's one you don't want to miss.